Hello traders, and welcome back to another weekly video where we take a look at markets for the week ahead and set up for the week ahead with trade ideas and things like that. Today we're going to be going over several markets. I'm going to start with gold. We'll take a look at some currency pairs, and of course we'll take a look at the indices as well. So stick around, hit the thumbs up button, and subscribe if you're new. Let's jump in. So gold here last week, it did a whole lot of nothing. It really did not make a significant push either direction. I was thinking we had the possibility of breaking through the highs. Did not see that, and we need to go ahead and mark that as our recent level of supply. If we take a look at the bottom area, though, we can see that this level was clearly our last sort of line in the sand for the bulls, right? Bulls very, very strong in this zone, as you can see. If you guys remember from my last week's video, I actually took a trade and made some good money riding the pullback here on gold. At this time, if you sort of ignore what's gone on this far on the screen, price looked like it was just going to keep running real hot, and it did, and I was able to make some money off of this, but it failed to ever break through that 2,000 mark. Now, as we go into this week, I want to show you guys something. So if we take a look at the 1 hour chart on gold and we zoom in a little bit here, again, remember, keep that fabled 2,000 mark in your mind for a second, because I'm going to bring it up again in a second. So 1 hour chart here, though, we zoom in here, and yes, although price is a little bit more muted, a little bit quieter this past week, what I want to show you guys is this little pattern that we had pretty much throughout the second half of the week. We saw price doing a very special thing, which is basically just putting in higher lows and higher highs. My opinion is this is a show of strength in the gold market, despite a little bit of quiet price action, probably due to some of the lack of news that we got this past week. We got a little PCE news, which caused a little bit of volatility, but nowhere near the monstrous moves that we had prior weeks where we had bigger news. We'll take a look at this week and see if there's anything to pay attention to in just a moment. But I think that this little price action that we saw throughout the week was very bullish for gold, and I continue to be bullish myself, looking for trade setups. In fact, speaking of trade setups, I actually had a trade, and let me see if I can pull it up for you guys. So this is our Discord channel where I share all of my trade alerts or signals, whatever you'd like to call them. I basically share my trades in and out. I took a trade last week, and admittedly, my entry was a little bit early, but I still think that this has a lot of promise. So I risked 1,434 pips, which, yes, that's a lot of pips, but gold is a little bit different than currency pairs. Entered around 1978, stopped at 1963. We'll see if I can stick into that trade going into the week ahead. But I liked this sort of concept, and I remember I showed you that 1 hour chart, right? Here's a 1 hour view. Price was making that 1 hour move throughout the week, and I decided to pick it up on a pullback. As long as that pattern continues to rise, we will be in a nice position there. So within the Discord, like I said, I share all the trades that I'm taking. So if you want to keep up to date with this, if you'd like to see these trades from myself, from Frank, who's my right-hand man in the trading space, and Ivan, of course, who has been with us for a long time as well, what you can do is you can click the link down below in the description, and we are actually doing a sale right now on the Discord. So if you want to join the Discord, you can see our entries and exits like I showed you. You can see and learn our strategies. We're actually doing a new funding program where we are trying to help traders who are serious about this stuff get access to larger amounts of capital. You can find out more about that by clicking the link below. And you can also, of course, join the community, get access to the Discord, and chat with the gang there. We've got a good community going there, and I'd love to have you as a part of it. Now, we have a lot of things to go over here today, so stick around and let's keep going into our next thing, which is, of course, the dollar. With all the volatility last week, how'd the dollar do? Well, let's take a look at the 4 hour chart, and you can see that, man, oh man, we even need to take a look at the daily, because look at this. So daily chart, right, we had this level of resistance here, which was key, right? Sellers were so strong here over the past couple months. And as we rose into that level again in recent times, where fears around inflation spiking again, and we had the fears about bank collapses and things like that, well, a lot of those same fears have gone since away as inflation this past week even came out less than expected. We had that PCE number. Let me see if I can pull that up for you guys. Give me one moment. Okay, so here is what I was referring to. So PCE numbers came out this past Friday, which were less than expected. Now, if you don't know what PCE price index is, it is a measurement of inflation. We'll zoom in here so we can take a closer look. And basically, it's the Federal Reserve's primary inflation measure. Inflation is important to currency valuation because rising prices lead to the central bank to raise interest rates out of respect for their inflation containment mandate. So we saw less than expected PCE price index numbers this past Friday. So again, not a great thing for the US dollar, right? Because if we see inflation continuing to cool down, it could continue to cool the dollar as well. So let's do it while we're on Forex Factory. Let's just also pull up next week's news. So taking a look here, you can see in terms of major news, we have, of course, our NFP stuff going on Friday, April 7th. We have NFP here in the United States, which will be probably a big highlight moment for the week ahead, especially for USD pairs, gold, S&P, that sort of thing. So let's now take a look at this dollar a little closer. So again, the pattern here continues to be the case that inflation is on the decline, and that same catalyst that pumped the dollar higher in the past couple of years is going away, it seems like. And I continue to be on that camp. Now I actually got teased in a recent video. You guys, I don't know if you guys saw the April Fool's video yesterday that I did. I was pretty evil for doing that. I'm sorry if I I basically threatened that our software was no longer going to be existing, and I scared a lot of people. So I'm sorry to everybody who saw that if I got you. One thing that I've pointed out here recently is that, when we look at inflation on the Edge Finder, let me show you guys this really quick. So if we take a look at inflation data, and I'm going to specifically target the US inflation, right? Excuse me, still getting over my cough from last week. The inflation, right? Inflation number, the catalyst that caused the dollar to be so dang strong during this period of time, notably late 2020 through 2021, 2022, until about midsummer of 2022, the dollar was just red hot. And it was because inflation was so rapidly increasing that the Federal Reserve had to raise interest rates at record pace to try and contain that inflation problem. Well, guys, the same concept. We got to pay attention here. We got to be clear about this. The reason I was so bullish during that time was right here. This was it, right? Now, what do we see? The trend is flipping. And I've been a little bit flip-floppy with the dollar recently, with the fear of like, hey, maybe this thing perks up again. But for the most part, I've been pretty hesitant to get overly long on the dollar. Now, when we take a look at the watch list, let's see what's up on the list. Now, again, I already went over my gold idea. Of course, gold highlighted as a buy trade for me here on the Edge Finder. If you're not familiar with the Edge Finder, what it is, it's a software that allows traders to essentially look at several metrics at an automated, very fast pace. You don't have to go search through YouTube and the entire internet just to get this information. You can simply just pull up the Edge Finder and it will pull a lot of data for you. So gets a score of +4 as we went over with gold. That is a very bullish score. Anything 4 or above is really considered pretty impressive confluence of many factors. Anyways, on the flip side, do we have anything of interest there? Well, we can see that we have NZD-CHF, Aussie dollar, pound USD. And this is notable. Let's go take a look at the pound here. What's the pound's chart looking like here today? So, and the answer is pretty clear. In terms of the pound dollar, when I zoom into this chart, this is a tough one for me to really be short on. Because you guys know, if you watch my channel, you know I'm a trend follower. So what I like to do is I like to be buying markets like this or selling markets that are moving down. But beyond just what I see in terms of the charts, it's the Edge Finder's confirmations that I use to actually look for trades to qualify myself or disqualify myself. Despite this chart looking pretty bullish, this is a chart I would not buy. Why? Let's go take a look. Okay, so we're back on the Edge Finder. And again, remember I pointed out that the pound has a sell bias. Why does it have a sell bias? Let's go pull it up. So if I go over to my major currency pairs and I go to pound USD, we get a sell bias or a -4 score. So we are now officially in the month of April. and let's go through the list here really quick. COT data. The latest COT data shows us that institutional money is very long USD and very short GBP. If you don't understand how that works, I'll show you more in just a second. I know that if people are newer to this software, this can be a bit confusing. I'll explain COT data in just a moment. It's a way for us to take a look at what institutional positioning is looking like. What are banks buying and selling? That sort of thing. Retail sentiment. The crowd is short, which is actually a bullish indicator. We know that with the crowd, if the crowd is long something or short something, it is usually a red flag, right? So if the retail crowd, which tends to lose money, is all shorting the pound, I'm going to be a little hesitant to short the pound. We'll talk more about that as well as we get along, but let's also take a look at seasonality. Historically speaking, the month of April is a slight down month, not too notably so like we saw in March, but still, despite that, April having slight bias to the downside. Trend reading, the trend is up, and this is where it's tough with me on the pound USD to really get short because the momentum is so heavy to the upside. However, economic numbers are where we get a real solid confluence. The GDP growth in the US is more favorable. Inflation is more favorable. Unemployment is slightly lower in the US, which is better, and interest rates are more attractive offered in the US than they are in the UK. So you use all that information, you say, okay, now what? We got a chart that's screaming higher. Do we just short it? In my opinion, no. What I like to do is as I mentioned, I like to wait for this trend projection to sort of start pointing to the downside. And that would usually encompass something like this. Series of lower lows, lower highs, lower lows, lower highs. Once we start seeing, a break of structure, such as if this level were to break, that would be a pretty good cue, in my opinion, to perhaps start looking for trades in areas like this. Okay. So my concept with that is if the technicals don't agree with the fundamentals and sentiment, which is what we use the edge finder for, then I'm going to be more on the hesitant, not going to do anything side. But once it actually starts to show strength to the downside, that is where things would get interesting. Now, also, one thing I noted was that retail sentiment for the pound, and I'll pull up retail sentiment for everything so we can just take a look at it. Feel free to pause the video if you'd like to take a look at this data on your own for now. If we have retail sentiment, and we're talking notably about the pound first, but you can take a look at any of your favorite assets here. We'll take a look at those in a second. The pound is very short biased, and at least that's what retail traders are doing. They're shorting this market. So I don't necessarily want to be on that trade because, again, it could just continue to trail higher and continue to cause some strife for the traders, the retail traders that are against this trend. I would like to wait for this thing to start breaking down because usually what happens, guys, is that when retail is most short on something, it's usually because it's trending up. Once this market starts trending down, retail traders will probably go long. That's generally how it goes. And let's test that theory. So retail traders are very long USDCHF. Let's see if USDCHF has been trending down recently. And there you go, right? Retail traders typically buy things that are moving down and they sell things that are going up. Not always, and that's not a perfect rule of thumb, and it's not a perfect indicator of when to buy and sell. But it's a simple observation that we can use with this data. This is, again, why we use data. We use data to observe trends and find opportunities in the markets. So we could take one more example of that. USDCAD, the retail crowd, is very much long. And look what happens. This is, I don't know if you guys are regulars. Again, I've been doing this recently. Do me a favor. If you made it 13 minutes into this video with me, comment down below, hey Nick, I made it in this far in the video. And I'll do my best to heart your comment. I've been doing this recently. It's got to be the coolest thing ever. I can't really explain it. It's just so cool that so many of you guys stick around in these videos and you're learning along with me and we're doing this thing together. If you made it this far in the video, comment down below. I'll try and heart your comment as a thanks to you for supporting my content here. If you are a regular, then you also probably know we've taken some time recently to really talk about this dollar CAD move. And I didn't make any money off this trade, but you know who did? My friend and my trading colleague, Frank, within the group. He was very active on the dollar CAD. And for those of you guys who are members with us already, you probably saw some of Frank's dollar CAD trades. He made great money catching this run up. Why? Because the edge finder was screaming buy setups and he was able to find some technical trades along the way. But guess who's no longer long dollar CAD? Frank or myself. The trade is gone. Look what happened. This is where things start to be a little bit sketchy. The trend to the upside was beautiful, beautiful, beautiful. But then it went into consolidation and we failed to ever make the break, right? We didn't see any trend continuation. In fact, we broke the wrong way. And so now the trade's gone. But guess who picked up the bag? Retail traders. Dollar CAD. 83% of retail traders positioning on dollar CAD is to the long side. So this is a major red flag to me to say, hey, you know what? The trend was good while it lasted, and retail traders were short during this time, notably, but now it's flipped. Now they're buying, and that is a red flag and a potential even bearish signal. So there you go. Now, I also mentioned I was going to talk about the Smart Money Tracker. Smart Money Tracker is an interesting one to take a look at with us here today because, again, this is so telling in terms of institutional positioning. So when we take a look at this, we've got JPY here as the number one and CAD as the number two most shorted assets that we track from the COT report, okay? And what I mean by that is the COT report. Let me give a brief introduction for those of you guys who are newer to the content, newer to the channel. We pull in COT data for users of the Edge Finder. We have, at this point, thousands of people using our software. We've invested, and I don't say this to pat myself on the back, but I want you guys to know this software, we've invested hundreds of thousands of dollars into building this tool. And I say that really proudly because a lot of it is somewhat crowdfunded. We've been selling copies of this for a year now. We've built some incredible tools. There's been several people on the team side who have designed and developed, and it's been the coolest project ever for me, and for a lot of people as well who have been supporters of this project. We've taken feedback from the community on this project. A lot of this is community-driven tools. It's been the coolest thing ever. So anyways, when we take a look at this, we are looking at the COT report data, and we're saying, what are institutions buying and selling? And let's isolate them. JPY is pretty dang short. CAD, very short. And look what took number one this week, guys. Gold. If this is not a continued confirmation for me to look for gold setups that make sense, I don't know what is. If we take a look at gold, we have a huge increase in long positions and a huge decrease in short positions, bringing our overall bias or our overall positioning 79% long. This is huge. This is a really, really strong confirmation. Now, of course, it's not a guarantee that gold goes higher, but seeing the institutions on the same side of the trade is it sort of is a reassuring thing in my personal opinion. So let's take a look at something else. Let's take a look at the euro dollar. The euro dollar, of course, in terms of recent price action. Oh, and I should take 1 second also to remind you guys, if you would like to support our project on the Edge Finder, which is that data, the link is down below in the description. We would highly, highly appreciate your feedback and your help in creating this project. This project I mentioned is 1 year old, and by purchasing yourself a copy of this tool, you will be supporting our project to continue to improve it, and you will get access with a pro access to the tool. You'll get access to all of the future updates, maintenance, fixes, improvements, everything that we do. You will be along for the ride as a supporter of the Edge Finder. You get access to the Smart Money Tracker, which is our COT data, our Retail Sentiment Indicator. You get access to our bank signals, our watch list, and signals for 30 plus assets and pairs that you saw on that watch list page. And also, it is a one-time payment. So we don't do monthlies. We don't do reoccurring subscriptions. We simply do one-time payments for people who want access to the software. And if you use that code that you see on the screen, you'll get a discount off of the tool. So take advantage of that. Grab yourself a copy as we go into the week. That way you can check on any pair you want, anytime you want. Whether you trade the euro, whether you trade, and again, you can see we have several, we've done work on all of these to build these. If you trade GJ, if you trade euro yen, if you trade commodities like gold, oil, and all the indices as well, which we still need to do the indices. So we got an action-packed video for you guys. I'm going to keep going, and I hope that you guys like these longer ones. Let me know. Again, if you made it 19 minutes, oh man, do we do a double take on this? If you made it 19 minutes in the video, let me know, and I will personally fly out and see. I'm just kidding, but I will really appreciate it. And as we get into this, we've got a couple more things I want to cover, so this video might go a little longer than usual. Euro dollar double topped here last week. We see this 1.092 level being a really strong level of resistance. Guys, I got pretty much treated like a fool by the euro back in this area here. I thought we were going to sell off once I mean, this is now a little bit of a ways away, but I liked this downward trend. This was the extreme. Price dropped like a rock from this level previously. So I figured, hey, it might be worth a little risk to reward to try and short this thing. Sure enough, it did not. It flew against me. I took a loss on that one. But now, you know, the question is the euro stalling out? Well, if we go look at COT data for a second, one thing that is a red flag to me is that the euro is very strong, but so is the US dollar, right? The US dollar is still heavily bought by institutional traders. We could take a look at the numbers, 67.5%, let's call it, long on the USD, and 74% long on the euro. So if I had to pick one, I wouldn't really want to, meaning these are both being bought by institutions, by hedge funds and things like that. So really, I don't love this chart, to be honest, for a buy or a sell. But in terms of purely a technical perspective for the bulls, what I would say, well, first of all, we need to mark this area as a key level of support, the very same level that destroyed me last time. Well, I shouldn't say destroy. I took a loss on this last time. The bigger picture is this thing going to break out higher this week? If dollar weakness continues, which I think it very possibly could, the euro has a little bit stronger of a case. But in my personal opinion, if I'm short dollar, I don't necessarily want to take it against the euro. Remember, you guys as traders, you have options. Do you want to, if you are shorting the dollar, okay, do you want to short it against the euro, or do you want to short it against something else? And again, we go back to the watch list. If I have a short bias in the dollar, what am I looking at? Well, I like the gold market. That's a good somewhat way of shorting the dollar, right? Having some exposure to short USD. If you are long XAU, short USD, that's kind of how that works, right? If I want to go short the dollar, you know, that's kind of the trade that I have in mind here on the list. That's the only one that's on my list right now. So something to think about there. Again, from purely a technical perspective, we had a double top. If this thing is able to break through the highs, then there is perhaps some expansion that could go on this week. And again, for the bears, you know, if this double top, for this thing to sort of be confirmed, I think you probably need to start seeing, you know, lower lows, lower highs, lower lows, lower highs, breakouts of this area. That would be truly bearish. But for now, kind of just in no man's land between two key spots on the chart. Waiting for breaks, in my opinion, is the way to go when watching the euro going into this week. But again, that's kind of a ways away. So just a less interesting chart on the list here for me this week. And you guys know I've loved trading the euro for years. So this one's just kind of not on my watch list right now as we speak. Now, I promised at the beginning of this video I'd take a look at the S&P 500, and oh my gosh, guys, are we in risk on? It certainly seems to be, with this weakness in the US dollar and this massive strength in risk on assets like gold, the NASDAQ, the S&P 500. It really beckons the question, are we just now in risk on? And where do we have the edge finder on the S&P 500? Where's the trades, Nick? Well, trust me, I would love for this edge finder to give me some green flags, some blue flags, some whatever you want to call it, flags, to tell me that I could potentially look for some setups on this S&P 500, but it's not there yet. And I'm being as patient as I can because my friends here that have watched me for years, and I know there are a lot of you guys, I love and appreciate you guys. You know I love trading the S&P. It's like my favorite trade in the whole world. I've said it many times, but it's not ready yet. Now, one thing that is a green flag for me is the fact that retail is piling into shorts on the S&P. But a red flag is the fact that so is institutional money. They're still very short exposed on the S&P 500. So I am a little hesitant there. Now, in terms of seasonality, month of April is historically positive, as almost every month is. Again, this is because the long-term upward bias of the S&P 500. GDP growth, still a negative catalyst. Inflation, positive. Unemployment and interest rates, negative. Let's see. what do we need for this to change? Well, interest rates need to come down or be flat, meaning in the next reporting, which is not this week, we'd like to see some sort of shift in the interest rate idea. We only saw 25 basis points. Can we get at some point here 0 or even a cut? That's, well, I think probably a ways in the way in the future. Probably no cuts in the immediate coming. But despite that, if we even got 0 or if we got a pause deciding to not interest rate hike any further, it would be incredibly S&P bullish, in my opinion. GDP numbers came out, and again, GDP numbers causing a bit of a bearish decline here, or a little bearish bias when it comes to the S&P. Inflation is on the decline, though. That's a massive bullish factor. And unemployment was on the rise in the most recent reporting. This might be it, guys. This might be what we need. This week, if we get good unemployment numbers, meaning things stay the same or even decrease, either ways, could be very S&P bullish. So that's something I'm paying attention to this week. That's something very, very notable. I'm glad that I took a look at this because this is very interesting. If that flips from negative to positive, that would actually give us a bullish reading on the S&P. Why? Because we'd get +3 by scoring this up if unemployment was +1. And again, we're getting ahead of ourselves. We're just assuming right now. But if we got +1 here, then that would be 1, 2, 3, 4, 5, 6, 5, 4, 3. We'd get a +3. Just doing some quick math on the scoring of the edge finder, that would give us a +3, which would finally give me the bias I need to get long the S&P 500. Now, of course, I'm still looking at the chart, and I'm saying, even if I get a bullish reading this week, what do I need on the chart? I need a pullback, right? You guys know me. I don't like to chase, and I hope that you guys don't like to chase either. It's a dangerous game to play, trying to buy this thing up in these levels, because you have to admit, even if you are a bull, like you can clearly see, I'm a secret bull. I can't justify getting long just yet. Despite that, though, I like the idea of getting long. We get a pullback, I'm all for it. I'm very much interested, especially if unemployment numbers come out flat, or actually, let's go look. Man, this episode is running long. I apologize that. I guess maybe some of you guys don't mind, but I'm just doing my analysis at this point. You guys know that I genuinely use my content. Sometimes people, I don't know if you made it this far. We're not doing a third one. 27 minutes, 28 minutes into the video. If we are honest here, as a content creator, a lot of times I will get claims of people saying like, Nick, you're just a YouTuber. You just make all your money from YouTube. And to be honest with you, to be completely honest with you, I pay 2 salaries to put on the live stream shows and this stuff. I actually don't make any money after I pay out my salaries to my employees. I make $0 from YouTube. Now, I think like in a year, the channels probably bring in like, I don't know, maybe the 2 channels maybe bring in like $80,000 a year, which, yes, that's a lot of money. But granted, when you have to pay 2 salaries, it's negative, right? Here in the U.S., salaries are expensive. You have taxes and everything. Anyways, I am ranting today. I'm in a rant mood today. Unemployment numbers are expecting 3.6%. If we get that number to stay as is, would be very, very interesting, because that could cause, as expected, if those numbers come out that way, some bullishness for the S&P 500. Anyways, like I said, like I was ranting, sometimes people will say, Nick, you only make your money through YouTube. And although I do make money from YouTube, that money goes away. The money that we do make is predominantly from selling software, and of course my own trading. So I really genuinely use these videos to help me take time out of my day, and I'm really just doing my analysis along with you guys. So if you guys made it throughout this entire video with me, I really, really appreciate it. This was a long one, and I hope that I helped someone else prepare for the markets ahead. I definitely helped myself prepare, and I know some of you guys are usually you take away something positive from these videos each time I do them. So if you enjoyed the content, take a second out of your day, smash that thumbs up button, subscribe, and we'll have more content for you throughout the week. So thank you for being here, and see you tomorrow.